Good morning, everyone. Good morning. Greetings and blessings from beautiful, sunny Myrtle Beach, South Carolina today. Happy Friday. I hope you guys had a great trading week. I'm going to cover GBPJPY, why I've been holding the buys, and GER30 or DAX, why I held buys on that this week. Do a quick breakdown, and hopefully you guys will understand my thought process. I combine market structure with smart money concepts as taught by ICT. ICT is the godfather of smart money institutional concepts. Market structure, I studied from several people, but the best market structure person I know out there is Alex Garp. He is awesome when it comes to market structure. And so let's cover this GBPJPY. As you see, we're looking at the daily view. And when I get my bias when I'm trading on a daily basis, I do trade based on what I see happening on the daily until the daily gets to a higher time frame POI like the weekly. I follow daily structure. So I got the highlighter here. We see GJ came and swept the sell side liquidity here all the way back in 2020. And since then, it's been on a constant uptrend. And let me clear this drawing, get my highlighter. That's what I want to use. All right. So here we swept the sell side liquidity, which is an indicator that price wants to run higher. We had the equal lows here, a stab and grab. Now this structure here was our new structure points from this high to this low. So anything until this is broken is internal structure, but we have to look for clues as to why price is going to break out of this internal structure on the daily. So you see we had a retail bearish flag with a continuation, but after it broke structure, then we have internal break of structure inside of the internal structure. The external structure points here, your high and low, you have an internal break of structure. Now, a lot of people would think that this is a true break of structure, but it's inside higher time frame movements. On a lower time frame, of course, you probably had a break of structure and a continuation, but for the time frame we're dealing with, we are still in a downtrend, okay? Now, another thing I started noticing, of course, the internal structure was making higher highs and higher lows. Here's another clue. Once this got mitigated, price pushed down, but it did not create a lower low. If price were going to continue to sell down, you would want to see it make a lower low from this pressure point. So when this did this, then created a higher high. This is what I consider a transfer over to the bulls. And then you see price went up into a retail bullish flag pattern. So again, I like to take market structure concepts and apply them with smart money concepts. So I have the impulse and a complex pullback, which is a bullish flag that was giving me a clue that price wanted to go higher. Okay, a lot of people I've watched the last 2 weeks, while everybody was consistently selling, but I was saying, no, we're not going to sell. Why? This right here, there were the equal highs here that had left liquidity. This got mitigated right here. And again, just like this price point down here, if we wanted to see price continue to sell off, we should have seen a break of structure and see aggressive movement to the downside. At no point did we see any aggressive break to the downside. We saw a complex pullback. A pullback to the downside typically means price is going to break up, just like a pullback to the upside typically means price is going to break down. Notice I use the term typically because nothing in Forex is guaranteed, but let's look over here. Price was corrective down, it pushed up. Price was corrective down, it pushed up. Price was corrective up, it pushed down. Corrective up, it pushed down. Corrective up, it pushed down. Sideways consolidation, okay? Price traded lower, lower high, and broke. So I do follow those retail patterns, but I pay attention to where these patterns are happening, and I pay attention to smart money concepts or institutional trading so I don't get faked out. So again, here, this had to get mitigated. It got mitigated, but it did not give us a break of structure to sell off. So when it came here again, I saw people again yesterday trying to sell this based on lower time frame bias. Don't forget, your lower time frame can confuse you if you don't back out and look at the higher time frame. So we are still holding buys there. Let's zoom out and see where this could go to next. We see we do have some price action over here that we could take a look at, and we'll see what happens when price comes to here. I don't start trying to make a bias of what price is going to do at certain price points until it gets there and I see how the market is moving, because not only is the zone important, how price is coming in towards that zone is extremely important. So that's all for GJ. Let's look at GER30 or DAX over here. I'll pull it up because we were trading based on 4 hour. Okay, again, we combined market structure and smart money. So price had came down here and mitigated some price action to the left. We had some imbalance and a point where price sold off. Price sold off. Again, when price came here to mitigate this, we had a corrective move back, lower time frame imbalance, pushed up. Look how price came in here. Those of you who follow supply and demand, that is a rally base rally. Okay, we also had liquidity here and an order block with imbalance. Again, that is an ICT concept. You want to watch some of his videos here on YouTube. All right, and that's basically it. When I saw price come here, it came back. I think the Wyckoff people call it a build up or a creek. And so that created a higher low with this internal structure. So again, you had the retail impulse, correction or bullish flag, continuation, retail, smart money. Put the two together and you can have some very profitable trades. Well, that's it. I hope you guys have a blessed weekend. I thank you so much for joining me, and I look forward to speaking to you in the future.